Hello everyone, this is John Person reporting for the Bottom Line Commodity Report. Let's take a look at the action that we saw last week. These are weekly bars. First chart I'm showing you is the Russell. We were going to look at the market internals. First, the fuchsia purple here is the advanced decline on the Russell. We had a bullish in not quite the engulfing because it didn't open lower, but as you can tell, we did engulf the prior 2 weeks ago. We closed above both of the moving averages. Look at the on-balance volume, making a new recent higher high. And look at the on-balance volume, the advanced decline. It did pop above its prior week's level. So this is showing us that actually there might be some buying into this market, which could propel prices a little bit higher. So now let's compare that to the Dow. The Dow has a very similar makeup. More stocks rallied in the Dow on this strong bullish engulfing pattern that did form here in the Dow, and it was on an increase in on-balance volume. And for the S&Ps, same makeup. Rally in the on-balance volume, which on strength was associated with a rise in more stocks accelerating to the upside on that rally. Now let's take a look at the tech space as reflected by the NASDAQ 100. Bullish engulfing pattern closing above moving averages, and we see a pop in the advanced decline. More stocks rallying on the accumulation of that little rally, along with a pop in volume. So here's the daily chart on the S&Ps. We had a high close doji. We talked about this last week. We said we might be due for a pop before we went to the Dallas Expo, and boy, we got an amazing rally. It was a good call. We saw that there was an accumulation or a potential for a bullish convergence, which did exist. Now what do? We wanted to be selling the S&Ps in the newsletter basis, the June futures, at 1333. We switched from June to September, and that translated into 1326. Based on these numbers, based on these signs, we have a little bit of a pop that comes into the stock market from a seasonal perspective. We might get a little bit higher price. So let me change to a monthly chart real quick. So what is the higher price we might get? Quite frankly, we might even get up to the moving averages, and we might even get, believe it or not, to the monthly pivot resistance. If this was the end of the month, this is not that bearish. It's the beginning of the month, so it tells me that we opened lower, traded lower, we could go back up. I do not want, I'm going to cancel, replace the orders for the September at 1326, and we're going to change those and get those up a little bit higher, probably where our stops would be, and lean against the monthly pivot resistance and the monthly moving averages. If the market is still bearish, we should get some better trade out of there. With news coming out of China on Saturday morning, news came out. It was not as dire as what everyone thought. In addition to that, everyone thinks that we're going to have this resurrection relief for Spain and Greece. While we might see some type of a relief effort from the IMF and the ECB, concerted banks, guess what? I don't think it's going to be sustainable, but at the very least, we might get a little pop, and I don't want to be premature. I'm not looking at the market as a longer-term bear, but in the interim, I thought that the market might trade off. We would have had a great sell here. The market went down, giving us like at least 20 some odd points in the S&Ps per the newsletter, and it popped right back up. The fact on Friday, this market closed on its highs, and we might have a failed doji pattern, which means the market's not giving us a sell signal. It might give us a continuation signal, and if it does, we might see the market get right up into this area, more closer to the 1350 area, as I shared with you on the monthly chart, and that's where I'm looking to maybe get short up in there. So based on the market internals, I'm replacing our orders. I'll send that in the email. We're going to be looking to reestablish short positions, and as I can put this on here for. All right, so now that I have multiple levels of resistance. We have a 3-period monthly. This is based off, as you can see, the September future. So I'm just using a unique market analysis to the underlying future. So I'm not using a continuation of June's data for trading off the SEP. I'm using September pivot analysis. And so first off, our weekly pivot analysis is up here at 1367. We have a 3-period pivot point moving average at 1363.5. I think that we might see the market come back. This breakdown candle up in here, we could see the market get right into that zone. I mean, if you think about it, it's only about 40 points higher. So if we get short and the market gap's higher Sunday night and could go up, stop us out, I'd prefer to be selling against the monthly pivot resistance because of the fact that we have this high close doji, this strong market. It sold off and came right back in everyone's face on Friday. The advanced decline is at least it's breaking out, showing their strength, and the on-balance volume did break over that high. So the first thing we're going to do is cancel, replace the orders. We're going to be looking to sell the September futures at 1366 and 1/4, 1366 and 1/4, and we're risking on this particular 1382 and 3/4, 75 on a stop. All right, so I just typed that in. We're going to sell for position trade the September per newsletter unit. Sell 1 September E-mini S&P 1366 and 1/4. Use 1382 and 3/4 on a stop. We'll see how that plays out this week based on some stellar news coming from China or the IMF, and we'll see how that plays out. If it maybe gets close, we're here, we're not at Expo, so we'll be able to watch this and perhaps change those orders. But I think that that's a realistic order. Our stops are above the high of the monthly pivot resistance, and from that low, if it does rally there, should give us a nice correction or a good trade. So the key is, why don't we just go ahead and get long here? Because it's still at pivot resistance. We are still in a bearish monthly mode. I'd rather sell rallies than, buy the middle of a rally. I mean, we started down here. We warned you that there could be a rally, and one did come. And so now I think the proper plan of attack is to sell a rally, sell into some intermediate term strength in the marketplace, and then look for a place that rally is where we should look to get short. So I think that's a fair assumption and a great trade up against resistance here. All right, the newsletter also stated that we would like to buy some bond puts. We did finally get we're in a daily sell signal. The market popped to the moving average. It acted as resistance. It's holding against this monthly pivot right in here, old highs and that pivot. So I was hoping to see maybe a rally and give us an M top formation before starting a descent, which we typically get a market decline on or about the 11th of June. That lasts going into the first week of June, another rally. So I think we might get a little short-term pullback in the market. Could that be the catalyst or at least we get a rally in the stock market? So, I mean, if we're expecting a rally in the stock market, we could see a decline in bonds. And then if we're looking to sell that rally, then that means stocks would go down and bonds would go up. So I think looking at the seasonal tendencies here of the bonds actually matches what we're looking at of the analysis we just did in the S&Ps. Just comparing the technicals of S&Ps to the seasonal trend of the bonds. On the Commitment of Traders report in the bonds, you can see that the specs are long, but there's not a lot of small speculators trading bonds. It's mostly professional traders, categories who aren't large enough to be a hedge fund. So in here, this is kind of for me, I like to personally follow the commercials. The commercials are short this market right here. Unlike S&Ps, where I like to do the opposite in E-mini S&Ps, because the small specs mostly migrate to trading E-mini S&Ps. Since there aren't a lot of small specs in bonds, I don't like to take a look. I don't trust following small specs. Hopefully that logic made sense to you. So what do we do as traders in this market? We can't buy puts because now we're going to get a little bit too much time decay, and I'm looking at potentially the knob spread that we've talked so much about. That's the we want to be short bonds and long treasury notes. The spread did come in a little bit, at least narrowed a bit, so we're going to just hold off on this. I think right now I'm just going to use the bonds for market analysis and trading off the S&P. And I can tell you right now, looking at this market, this is the euro, it almost looks very similar to the S&P. So this is the euro currency. So we're in a daily buy. The market rallied, pulled back, and then had that rally joined the S&P. So if something happens in Europe over the weekend, or it did happen, and we see some buying strength in this market, we really could take, looking at this Commitment of Traders report, boy, we really could take a lot of people by surprise. The commercials are the longest they've been, I think, in history. And the small specs are short 17% of the overall open interest. That's a huge percent of net position to open interest. So with that said, we could see maybe a move, and I'm not trying to create havoc, but we do have, remember this, there is a gap even on the futures way up here. That's why that black line is there. I mean, if everyone was bearish in the hole, we could see that rally. I'm not going to join that rally unless I get a little bit more participation. I wanted to see a buy in the market down around 123. We gave that number out in a webinar a week and a half ago. The daily pivots actually corresponded with that longer term pivot at 123. And it's just been kind of a choppy market, with the high at 126. It's only been a 300-point rally, and it's been trading back and forth. So we've gone from a strong trend to a consolidation. I think we still have to play the outer bands and pretty much assume that we are in a consolidation phase. I look at this these two lows here. If we took those lows out, we have the box of actual prices with opens and closes near these lows. So we have support at 123.67. These old lows are now, look at this, that low right there on May 18th is acting as a high, as on May 28th as acting as a high on June 7th. So if we can break out of this, say, boxed value right in here, I think the upside's there and the downside's below the boxed value. So I'll look for intraday. I'm not going to put a buy recommendation and look to buy a pullback because that might be, a fictitious scenario based on how we trade in the European session at 2 in the morning, number one. And number two, if there was IMF intervention on behalf of Spain, that's going to, cause a relief rally. If the euro goes up, the stock market will go up, and everyone will be hip, hip, hooray again. So therefore, let's just watch this market and see how we open Monday. And if you want to talk about a similar chart pattern, take a look at crude oil. Very similar. In the market had a low, it rallied, it pulled back, and then it kind of rallied. I'm still looking to buy, and I told you the other day in the video that I think we might test a low, and I wanted to buy under 80. Maybe we won't get that, but we're certainly not in any daily buy mode in crude oil. We're certainly not in any weekly buy mode, and we are playing against a potential double bottom, so I'm holding off and waiting. I have no clear signals now to do anything other than sit and wait. This is just a consolidation pattern. This might be good for some day trading, buying lower value and selling upper value. But other than that, it's only good for maybe potentially day trading. I'm not sure we're going to get the trade-off in the Japanese yen, but we wanted to be a seller in the yen, and the yen has gone down. I was hoping to get, just from when we saw this market peak at when we wrote the newsletter on the 31st, then we had June 1st. It was very probable. I wasn't looking from that high, 128.81. We were looking to sell right up here against 130.28. So from that high to this high, just look for a little bit overextended valuation. Sometime this month. That's what I was looking at. It wasn't like it was, pie in the sky type of a trade. If you think about it, that's not too far off. If I can draw that line in, at least you can see. This area was not too far off of the May 31st high. So, in essence, what are we going to do from here? It's still a long month ahead. We'll look for other trades. And in the meantime, keep your orders working in the yen per the newsletter recommendation. All right, soybeans. Taking a look at soybeans. We had a huge rally here. I come back from Dallas. It's about blistering 90 degrees in Chicago. The grass is now turning from, in the first week of June. Actually, you've got to think a lot of farmers got their crops in very early. And, we really are missing a little bit of rain. So it's getting a little dry, and that might be a little bit dangerous for the crops. So there's two things I want to do. If it is perceived 90 degrees in Chicago, in the Midwest, in Illinois, in the heart of Bean Belt, so to speak, we got a recommendation to sell up in here, but I'm not looking to sell soybeans, to be honest with you, with a high closed doji on a weekly chart. So we had a high closed doji on a weekly chart, and if it's a drought and this thing could just get crazy, we're canceling these orders. So I'm going to cancel these orders and give you instructions to cancel these orders, straight cancel the soybean orders until we get more definitive information. I mean, it might be a great trade. It came close, but you know what? The fundamentals are changing, and I'm as a technician, I also pay attention to the fact that soybeans, if there's a drought or a drought scare, fear can run a market up more than we can finance it. So in any event, I am thinking that, let's hold off till we see more information there. So we're going to straight cancel the soybeans. And we'll cancel that for now until we get maybe, if we rally up, we go up a little bit higher, maybe get a sell signal. If it fails, then we get a daily sell signal. We get back on it. That's all. So just for right now, cancel those orders. All right, so here's a trade I am interested in, is the British pound. It was an honorable mention. Typically, we see the pound rallies in the first week of June. And this is a weekly chart. You can see the first week of June bottoms out, and it came a few days early. So let's take a look at this chart and take a look at the pound. Okay, so this is Friday, this is Thursday, this is Wednesday. Wednesday we see a high close doji. Buy on the close of the next session's open. You want to place your stop below the low of the doji, or the lowest low of the last 4 bars, and sure enough, it is the doji down there at 153. So the market pulled back to moving average, and it kind of rallied a little bit. No harm, no foul. So with the pivot down here, but we're at seasonal lows in the market with a seasonal tendency for the market to rally. I'm looking at this pound and I'm a little bit more intrigued. It went up to the first test of monthly pivot and then fell off. I'm liking this pound. I think we ought to be looking at this pound for a longer term perspective. I think with the fundamental event that the Olympics are going to be in the UK, there's going to be a big business. It's going to be good for the economy. We could see a pickup in currencies. And I'm liking this trade a little bit more than what we talked about in the newsletter. So if you are interested in the pound, I'm thinking, because all my indicators still right now, blue is below gold as a weekly. Even though the market looks good, it is a high closed doji. Blue is below gold for the week. I'm going to give this a couple more days. So what if we're a week early, or it's just coming in here and it wants to test that low? I want to see if this holds over by midweek. So if you are a currency trader, I think at the very least we want to look at maybe to see if 153.58 holds. I don't have any support there other than just chart price action. Looking at this close, this near that low, right in here. That's why I just drew that in there. On a daily basis, take a look at this. You have 153.40, which is that green line. And let me get rid of this. 153, just around 18 points or so. You might pull back, stop everybody out, and take off. I'm going to see if the market pulls back, see if how the market behaves down there, and I'd rather buy not the action on the way down, that's catching a falling knife, but the reaction on the way up. So watch that for self-directed traders, you bottom line traders. I'll be watching it too. If I see it, I'm going to go for it. So I'm just giving you a heads up. All right, last but not least, cattle. Cattle, we talked about cattle, and we're in a trade on the live cattle. I said that cattle does have a seasonal tendency to move up. And you know what? I said the market, we had this buy signal. I didn't want to buy the breakout. I said it could pull back. It could pull back. I don't know. It could test that low somewhere in here. Obviously, it didn't. What it did is it just pulled back, but it did make lower lows. So if it has a lower high, lower low on a daily chart, where are you going to put your stop? How do you really trade that? It's kind of tough, I'll be honest with you. So what we've done is I said that this could be a potential bull flag. It certainly looks like shoulder, head, shoulder, and we did break out of a kind of a neckline. So there's our head and shoulders pattern. Shoulder, head, shoulder. From the time that it took to form this right shoulder was about the time it took to form that left shoulder. So we do have what we would call a symmetrical inverted head and shoulders bottom. From the head to the neckline, if you measure up, will give you your first objective. Now we have a potential bull flag, and we did have a true breakout. And not only did the market break out from that high to this high, so I just drew a simple trend line because it's a resistance line. It broke out and maintained its value above that trend line one day. The next day it came down, and look what it did to the trend line. It tested the trend line, and then closed up. So we have 2 days that closed above a breakout value. This should spell higher prices for cattle to come. How we did it was in taking advantage of a bull spread, which reduced our margin and gave us exposure to the long side. I said, look for this trade to buy a pullback at negative 810 basis the August versus December. In fact, here's the chart that we used. We had an identification of a trend line break, and on an intraday basis, as you can see, let's go 240 minutes. We got picked up somewhere, I think, right in here. We got real lucky. 810 was, as you take a look at this chart, it didn't get much. 812 and a half, so we bought pretty much the low of this base. Now, I'm going to be honest with you. I would like to see, with stronger beef prices, I want to see this market break out of this downside kind of channel, right? So all we did was get, by picking out our spots, we're not on a buying breakouts. We waited for the market to come to us, set our price, became a market maker, good execution, and now we're slightly ahead of the trade. To be truthful, we're 22 points ahead of the trade. That's not enough to run home about, but it is $100 per contract. So nice trade. We're up money, and we're looking for a seasonal trend to the upside. If you think about it, it's $480 margin requirement, and you're up $100. Almost 20% is not bad on a little tiny trade. So there you have it. That's what we're in so far. I hope you enjoyed the information. Cancel your orders in the beans and move our orders in the S&Ps, and I'll check back with you during the week. Thank you all. Hope you had a great weekend, and quite frankly, it was nice to see a few of the folks down there in Dallas, especially nice to put the name in the face, and I wanted to mention at least to say hello, Heidi. Thank you so much for being there. All right, everyone. Have a great rest of your weekend.